Question 1. Which of the following is the most important factor for underwriters when assessing a property for insurance coverage? A. The age of the property. B. The location of the property. C. The number of bedrooms in the property. D. The color of the property's exterior. Answer. B. The location of the property. Explanation. The location of a property is one of the most important underwriting factors because it directly impacts several aspects of risk assessment. For instance, properties in flood zones or areas prone to natural disasters, earthquakes, wildfires, etc., pose higher risks and may result in higher premiums or even denial of coverage. Insurance companies use geographical risk data to determine whether properties at increased risk can adjust their coverage accordingly. The age of the property, number of bedrooms, and exterior color are not as significant in determining risk compared to location. Question 2. Mr. Taylor is applying for a life insurance policy with a 20-year term. The insurer evaluates his health condition, occupation, and lifestyle before offering a premium rate. Based on the underwriting process, which of the following should Mr. Taylor expect in terms of the premium rate if his occupation is considered high risk? A. A standard premium rate. B. A lower premium rate. C. A higher premium rate. D. No premium rate due to the high-risk occupation. Answer. C. A higher premium rate. Explanation. Life insurance underwriters assess multiple factors when determining the premium for a policyholder, including occupation, health, and lifestyle. If Mr. Taylor's occupation is high risk, such as working in construction or as a firefighter, the insurer is likely to offer him a higher premium rate due to the increased risk of accidental death or injury associated with such occupations. This reflects risk-based pricing approach that underwriters use to adjust premiums. A standard or lower rate would only be offered if the risk factors were deemed minimal. Question 3, scenario-based. Mrs. Johnson has recently purchased a new home and applied for property insurance. During the underwriting process, the insurer requests information about the property's fire safety measures, including the presence of smoke detectors, sprinkler systems, and fire extinguishers. After reviewing the application, the insurer finds that the property has outdated electrical wiring that does not meet modern safety standards. What is the most likely outcome for Mrs. Johnson's application? A. The insurer will approve the application and offer the standard coverage. B. The insurer will approve the application but exclude coverage for fire-related damages. C. The insurer will reject the application due to the outdated wiring. D. The insurer will approve the application but offer higher premium to account for the fire risk. Answer. D. The insurer will approve the application but offer a higher premium to account for the fire risk. Explanation. Underwriters assess risk factors such as the condition of the property, including its electrical system, to evaluate the likelihood of potential claims in this scenario. While the outdated wiring poses an increased fire risk, insurers will typically not reject the application outright. Instead, they will offer coverage, possibly at a higher premium. To account for the additional risk, it may also require the homeowner to make necessary upgrades to the electrical system or implement other safety measures as conditions of the policy. Rejecting the application is unlikely unless the risk is considered uninsurable. Question 4. Which of the following statements about indemnity and insurance is most accurate? A. Indemnity guarantees that the insured will profit from a claim. B. Indemnity means the insured is compensated only up to the amount of their loss. C. Indemnity allows the insured to receive a payout that exceeds their loss in some cases. D. Indemnity is irrelevant when determining the value of property damage claims. Answer. B. Indemnity means the insured is compensated only up to the amount of their loss. Explanation. Indemnity is a core principle of insurance, meaning that the insured is compensated for their loss but not to exceed the actual amount of the loss. The goal is to restore the insured to the same financial position they were in before the loss occurred. It prevents the insured from profiting from their claim. Payouts that exceed the actual loss or loss of profit are against. Principle of indemnity. It is always important to assess the real loss and avoid overvaluation or underestimation when underwriting property claims. Question 5. Which factor would most likely lead to a life insurance policy being rated as substandard? Higher premiums. A. A history of high cholesterol but well managed with medication. B. A healthy lifestyle with regular exercise. C. A person with no previous medical history. D. A low-risk occupation. Answer. A. A history of high cholesterol but well managed with medication. Explanation. Underwriters assess the health history of applicants for life insurance. A history of high cholesterol, even if managed by medication, indicates a pre-existing condition that may elevate the risk of heart disease or related health issues. As a result, the insurer may consider the applicant to be high risk and offer a substandard rating with a higher premium. In contrast, healthy lifestyle, absence of medical history, or low-risk occupation are factors that can potentially result in a low premium or even a standard rating. Question 6. Mr. Simmons, who is applying for property insurance, owns a home located in an area prone to flooding. The insurer requires additional information about flood control measures on the property. What should Mr. Simmons expect regarding his premium and policy terms? A. He will likely be offered standard coverage without any change in premiums. B. He will be offered a flood exclusion clause as part of his policy. C. He will receive a low premium due to the flood risk mitigation efforts on his property. D. He will be offered flood insurance as an optional additional coverage at an extra cost. Answer: D. He will be offered flood insurance as an optional additional coverage at an extra cost. Explanation: properties located in flood-prone areas generally require specialized flood coverage, which is not included in standard homeowners insurance policies. The insurer may offer flood insurance as an optional add-on for an additional cost, taking into account flood control measures on the property. E.g., barriers, elevated structures. Flood insurance, typically priced based on the level of risk, including local environmental conditions and mitigation efforts. Excluding flood coverage or offering standard coverage without adjustments is not typical for homes in such areas. Question 7. Which of the following best describes the role of underwriting guidelines in the insurance industry? A. They are binding rules that must be followed for every policy written. B. They are flexible frameworks that assist underwriters in making informed decisions. C. They are strictly used to set premiums without influencing policy acceptance. D. They only apply to property insurance and not to casualty or life insurance. Answer: B. They are flexible frameworks that assist underwriters in making informed decisions. Explanation: underwriting guidelines are essential tools that help underwriters assess and evaluate risks. They provide a structured approach to decision-making, but they are flexible and can be adjusted depending on the individual circumstances of the applicant and the risk involved. While guidelines are not strict rules that must be followed in every case, that consistency in the underwriting process and help underwriters make informed decisions about policy acceptance, coverage terms, and premiums. They apply to all types of insurance, including property, casualty, and life insurance. Question 8. What is the primary purpose of subrogation in insurance? A. To allow the insured to recover more than their actual loss. B. To ensure the insurer recovers the amount it paid to the insured from a third party. C. To protect the insurer from providing coverage for claims that fall under exclusions. D. To increase the premium for policyholders involved in claims. Answer: B. To ensure the insurer recovers the amount it paid to the insured from a third party. Explanation: subrogation is the legal process by which an insurer seeks to recover the costs it paid for a claim from a third party that is legally responsible for the loss. This process helps insurance companies maintain their financial stability and avoid excessive costs. It prevents the insured from collecting a payout from both the insurer and the responsible party, ensuring fairness. Subrogation does not increase premiums or involve recovering more than the actual loss. Its purpose is strictly to recoup payments made on behalf of the insured. Question 9. Scenario-based. Mr. Davis recently moved to a new city and is applying for auto insurance. During the underwriting process, the insurer identifies that Mr. Davis has a history of multiple speeding tickets and a recent at-fault accident. What is most likely to happen with his auto insurance policy? A. The insurer will offer him the standard premium rate, as if he has a clean driving record. B. The insurer may offer him a high-risk policy with higher premiums due to his poor driving history. C. The insurer will automatically deny him coverage due to his accident history. D. The insurer will offer him a low premium due to his history of driving incidents. Answer: B. The insurer may offer him a high-risk policy with higher premiums due to his poor driving history. Explanation: Underwriters assess driving records to determine the risk profile of auto insurance applicants. Mr. Davis's history of speeding tickets and a recent at-fault accident indicates higher risk, which could result in a higher premium or even placement in a high-risk pool. Insurers do not typically deny coverage based on history alone, but they may impose stricter terms, such as higher premiums, to reflect the increased likelihood of claims. Offering him a low premium or standard coverage would not be appropriate given his risk profile. Question 10. Which of the following would be considered an example of a moral hazard in underwriting? A homeowner with a history of filing multiple claims for property damage. B. A policyholder intentionally setting fire to their property to collect insurance proceeds. C. A driver who maintains their vehicle regularly to reduce the risk of breakdowns. D. An individual who is in excellent health and maintains a healthy lifestyle. Answer: B. A policyholder intentionally setting fire to their property to collect insurance proceeds. Explanation: a moral hazard refers to the risk that an individual will engage in fraudulent or unethical behavior because they are insulated from the consequences due to insurance coverage. In this case, intentionally setting fire to the property to collect insurance proceeds is a classic example of moral hazard, as the policyholder's actions are designed to cause a loss. Moral hazards often involve individuals exploiting the system for financial gain. On the other hand, regular maintenance of property or a healthy lifestyle reduces the overall risk but does not involve unethical behavior. Question 11. Which of the following best describes an underwriter's role in risk evaluation? A. To accept all insurance applications without question. B. To reject all high-risk applicants regardless of circumstances. C. To assess the applicant's risk and determine appropriate coverage and premiums. D. To ignore underwriting guidelines in favor of customer satisfaction. Answer: C. To assess the applicant's risk and determine appropriate coverage and premiums. Explanation: the role of an underwriter is to evaluate the risk presented by an insurance applicant and determine the appropriate coverage and premium. Underwriters balance the risk involved with the insurer's ability to take on that risk. They follow established guidelines, but they can adjust premiums and coverage based on the unique risk presented. They do not simply accept or reject applications without thorough assessment. Question 12. Which of the following is not a factor considered when underwriting a life insurance policy? A. The applicant's age and health history. B. The applicant's occupation and hobbies. C. The applicant's social security number. D. The applicant's lifestyle habits, such as smoking. Answer: C. The applicant's social security number. Explanation: while underwriters will consider various factors such as the applicant's age, health, occupation, hobbies, and lifestyle, e.g. smoking, the social security number is primarily used for identification and verification purposes, not for evaluating risk. Underwriting decisions are based on factors that impact the applicant's risk profile and the likelihood of claims, not on administrative identifiers like social security numbers. Question 13. Scenario-based. Sarah is applying for homeowners insurance. During the underwriting process, the insurer notices that her home is located in an area with a high risk of wildfires, but Sarah has made significant improvements to the property, including installing fire-resistant roofing and creating a defensible space around her home. What is the most likely outcome of the underwriting process? A. Sarah will not be eligible for homeowners insurance due to the wildfire risk. B. Sarah's premium will be extremely high, reflecting the high wildfire risk. C. Sarah's policy may be approved with low premium, given her fire risk mitigation efforts. D. Sarah will be asked to remove the fire-resistant roofing before her application is considered. Answer: C. Sarah's policy may be approved with low premium, given her fire risk mitigation efforts. Explanation: underwriters consider risk factors such as wildfire exposure when evaluating homeowners insurance. However, mitigating actions taken by the homeowner, such as installing fire-resistant materials and creating defensible space, can reduce the overall risk. This could lead to low premium or even approval of the policy at standard rates. No mitigation efforts were made. The policy might be denied or priced at higher premium. Question 14. Which of the following is a characteristic of the principle of utmost good faith, uberimi fide, in insurance? A. The insured is not obligated to disclose any material facts to the insurer. B. Both parties to the contract must disclose all material facts relevant to the risk. C. The insurer is responsible for disclosing any material facts to the insured. D. The insured only has to disclose facts if the insurer directly requests them. Answer: B. Both parties to the contract must disclose all material facts relevant to the risk. Explanation: the principle of utmost good faith, or ubirmi fide, requires both the insurer and the insured to disclose all material facts related to the risk being covered. This means that the insured must disclose relevant information about their health, property, or lifestyle, and the insurer must provide clear and complete information about the terms of the contract. Failure to disclose material facts can result in the cancellation of the policy or denial of a claim. Question 15. In property insurance, which of the following is not typically a factor considered in underwriting? A. The construction type of the insured property. B. The insured's income level. C. The location of the property. D. The previous claims history of the property. Answer: B. The insured's income level. Explanation: underwriting for property insurance focuses on factors that directly impact the risk to the property, such as construction type, location, e.g., proximity to flood zones or areas prone to natural disasters, and the property's claims history. The insured's income level is typically not a factor in property insurance underwriting. Income is more relevant in life and health insurance underwriting. Question 16. Which of the following is an example of a physical hazard in insurance underwriting? A. The applicant's history of substance abuse. B. A poorly maintained roof that poses a risk of collapse. C. A dangerous occupation such as working with hazardous chemicals. D. The applicant's financial instability. Answer: B. A poorly maintained roof that poses a risk of collapse. Explanation: a physical hazard refers to a condition or feature of the property or environment that increases the likelihood of a loss. A poorly maintained roof is an example of a physical hazard as it poses an increased risk of damage or collapse. On the other hand, a history of substance abuse or financial instability may be considered moral or financial hazards, while a occupation relates to the applicant's personal risk profile. Question 17. What is the primary purpose of reinsurance in the insurance industry? A. To reduce the number of policies issued by an insurer. B. To increase an insurer's profit margin by transferring risks to another company. C. To allow an insurer to manage its risk exposure by transferring portions of risk to other insurers. D. To improve the financial position of policyholders by lowering premiums. Answer: C. To allow an insurer to manage its risk exposure by transferring portions of risk to other insurers. Explanation: reinsurance is a practice where an insurer transfers part of its risk to another reinsurer. This allows the original insurer to manage its exposure to large losses and maintain financial stability. Reinsurance does not directly lower premiums for policyholders or affect the number of policies issued, but helps insurers manage their overall risk portfolio. Question 18. Which of the following best describes the underwriting process for health insurance? A. Health underwriting is typically based on an individual's health history, lifestyle, and occupation. B. Health underwriting solely relies on an applicant's income level. C. Underwriting for health insurance is not necessary as it is based on the applicant's claims history alone. D. The insurer only considers the applicant's age when underwriting health insurance. Answer: A. Health underwriting is typically based on an individual's health history, lifestyle, and occupation. Explanation: health insurance underwriting involves evaluating the applicant's health history, lifestyle, e.g., smoking, exercise habits, and occupation, as certain jobs may involve higher health risks. These factors influence the risk assessment and the premium amount. Income level and claims history are not typically primary factors in health underwriting. Question 19. Scenario-based. Mr. Watson, a life insurance applicant, has a family history of heart disease. He smokes 1 pack of cigarettes per day and occasionally drinks alcohol. The underwriter is evaluating his application. What is the most likely impact on Mr. Watson's life insurance premium? A. Mr. Watson will receive a standard premium due to his family history of heart disease. B. Mr. Watson will receive a higher premium due to his smoking habit and alcohol use. C. Mr. Watson will be denied life insurance coverage based on his family history of heart disease. D. Mr. Watson will receive a reduced premium for living a moderate lifestyle despite his family history. Answer: B. Mr. Watson will receive a higher premium due to his smoking habit and alcohol use. Explanation: Underwriters consider lifestyle factors such as smoking and alcohol consumption when assessing life insurance applications. These habits significantly increase health risks, leading to higher premiums. While a family history of heart disease is a relevant factor, it is not necessarily grounds for denying coverage. Smoking and alcohol use direct risk factors for underwriters, and these will likely result in a higher premium for Mr. Watson. Question 20. Which of the following is an example of a moral hazard in underwriting? A. An applicant with a clean driving record applying for auto insurance. B. An applicant inflating the value of their personal property to receive a higher payout. C. An applicant who maintains their car regularly to reduce the likelihood of accidents. D. An applicant who lives in a low-risk area for natural disasters. Answer B. An applicant inflating the value of their personal property to receive a higher payout. Explanation: a moral hazard arises when an individual takes unethical actions because they know they are covered by insurance. Inflating the value of personal property to receive a higher payout is an example of a moral hazard. It involves dishonest behavior intended to exploit the insurance system. A clean driving record, regular vehicle maintenance, and a low-risk area are all examples of risk-reducing behaviors and do not constitute moral hazards. Question 21. Which of the following best describes the principle of insurable interest in property insurance? A. The insured must have a financial stake in the property at the time of the loss. B. The insured must own the property outright to purchase insurance. C. The insured can have a claim for any property they have access to. D. The insured does not need to demonstrate any financial interest in the property. Answer 8. The insured must have a financial stake in the property at the time of the loss. Explanation: insurable interest requires that the insured have a financial stake in the property being insured. This ensures that the insured has a legitimate reason to protect the property and prevents moral hazards where individuals could profit from insuring property they have no financial connection to. Insurable interest must exist at the time of the loss to make a valid claim. Question 22. Which of the following would be considered a hazard in underwriting a homeowner's insurance policy? A. A neighborhood known for frequent break-ins. B. A well-maintained home with modern wiring and plumbing. C. The homeowner's consistent payment of premiums. D. The homeowner's history of filing claims for small damages. Answer A. A neighborhood known for frequent break-ins. Explanation: a hazard is a condition that increases the likelihood of a loss. A neighborhood known for frequent break-ins would be considered a hazard in underwriting a homeowner's insurance policy. Hazards can be physical, G. Unsafe construction, moral, G. Applicants' past behavior or societal, G. High crime areas, and they influence the overall risk assessment for the insurer. Question 23. What is the main purpose of risk classification in insurance underwriting? A. To categorize applicants based solely on their age. B. To assign premiums based on an applicant's risk profile and exposure. C. To determine whether an applicant is eligible for insurance coverage. D. To establish standard coverage limits for all policies. Answer B. To assign premiums based on an applicant's risk profile and exposure. Explanation: risk classification is a process used by underwriters to assess an applicant's risk profile and exposure to potential losses. Based on this assessment, the insurer can determine an appropriate premium. Risk classification considers factors such as age, health, occupation, and claims history to create a pricing structure that reflects the likelihood of being made. Question 24. Which of the following is true regarding the underwriting process for a personal auto insurance policy? A. The insurer will approve any applicant regardless of their driving history. B. The applicant's driving history, including traffic violations and accidents, is key factor in underwriting. C. The insurer will base the premium solely on the applicant's income level. D. The underwriting process focuses only on the applicant's credit score. Answer B. The applicant's driving history, including traffic violations and accidents, is key factor in underwriting. Explanation: underwriting for auto insurance primarily involves evaluating the applicant's driving history, including any traffic violations, accidents, or claims history. This helps the insurer assess the risk associated with insuring the applicant. Income level or credit score may be used to lesser extent, but are not the primary focus in determining premiums for auto insurance. Question 25. In property insurance, what is a deductible? A. The amount an insurer pays on behalf of the policyholder for a claim. B. The amount the policyholder must pay out of pocket before the insurer will cover a claim. C. The amount the insurer charges for the policy coverage. D. The amount of money the policyholder receives in the event of a total loss. Answer: B. The amount the policyholder must pay out of pocket before the insurer will cover a claim. Explanation: a deductible is the portion of a claim that the policyholder is responsible for paying before the insurer begins to pay out. The deductible is subtracted from the total claim amount and the insurer covers the remainder. A higher deductible generally leads to lower premiums, but increases the out-of-pocket costs for the insured in the event of a loss. Question 26. Scenario-based. John applies for life insurance but is found to have a pre-existing medical condition. The insurer offers him a policy with higher premiums and exclusions related to his condition. Which of the following best describes this situation? A. John's application has been denied outright due to his pre-existing condition. B. The insurer has offered policy with higher premiums and exclusions reflecting the increased risk. C. John will receive the same premium as any other applicant because his condition is irrelevant. D. John must undergo further medical testing to determine eligibility. Answer: B. The insurer has offered a policy with higher premiums and exclusions reflecting the increased risk. Explanation: in cases where an applicant has a pre-existing medical condition, insurers may still offer a policy, but typically at higher premiums to account for the increased risk. They may also include exclusions related to the condition. This reflects the insurer's attempt to balance the risk while still providing coverage to the applicant. Question 27. Which of the following is an example of a moral hazard in life insurance underwriting? A. An applicant who smokes regularly and has a family history of heart disease. B. An applicant who inflates the value of their personal property to receive a larger payout. C. An applicant who works in a dangerous occupation but takes steps to minimize risks. D. An applicant who is financially stable and has no history of major medical conditions. Answer: B. An applicant who inflates the value of their personal property to receive a larger payout. Explanation: a moral hazard occurs when an insured individual behaves in a way that increases the likelihood of a claim due to the coverage provided. In this case, inflating the value of personal property to receive a larger payout is an example of moral hazard because the individual is intentionally taking advantage of the insurance policy in a dishonest manner. Question 20. Which of the following is an example of a physical hazard in underwriting? A. An applicant who has a history of substance abuse. B. An applicant who lives in an area prone to frequent earthquakes. C. An applicant's house with old, faulty wiring that poses fire risk. D. An applicant who works in high-stress occupation. Answer: C. An applicant's house with old, faulty wiring that poses fire risk. Explanation: physical hazard refers to condition of the property or environment that increases the risk of loss or damage. In this case, old, faulty wiring in house increases the risk of fire and is considered physical hazard. Other options involve moral or social hazards, substance abuse, occupation stress, or environmental hazards, earthquake-prone areas. Question 29. Which of the following is true regarding the role of credit scores in underwriting auto insurance policies? A. Credit scores are never used in the underwriting process for auto insurance. B. Insurers cannot use credit scores to determine eligibility for coverage. C. Insurers may use credit scores as a factor in determining premiums as they are correlated with risk. D. Credit scores are used only to determine eligibility for purchasing auto insurance, not premiums. Answer: C. Insurers may use credit scores as a factor in determining premiums as they are correlated with risk. Explanation: many insurers use credit scores as one of the factors in underwriting auto insurance policies because studies have shown that individuals with lower credit scores are statistically more likely to file claims. Therefore, credit scores are often used to assess risk and determine premiums. However, insurers are required to disclose use of credit scores and ensure it is done in compliance with applicable laws. Question 30. Which of the following is not a factor that would be considered in underwriting for health insurance? A. The applicant's medical history and pre-existing conditions. B. The applicant's occupation and lifestyle habits, such as smoking or exercise. C. The applicant's income level. D. The applicant's age and gender. Answer: C. The applicant's income level. Explanation: Health insurance underwriting focuses on factors directly related to an applicant's health and risk level, such as their medical history, pre-existing conditions, occupation, lifestyle, e.g., smoking or exercise, age, and gender. Income level is generally not factored in underwriting for health insurance, though it may be relevant for eligibility in government programs like Medicaid or for affordability considerations.